And allow me to say, I am not an expert on matters finance, but probably I will give you an interesting story on how I've decided to be an advocate for young people and make sure they're aware of the financial opportunities in the country. So a while back, I was invited to a webinar to be able to speak about a book by R.S. Ugu, The Smart Money Woman. And, just, how you do a book review, read it and then bring the notions that are coming out of the book. And I remember in the question and answer session, it was very interesting because a lot of those who asked the questions were like, when it comes to the context of the Kenyan society, I mean, it all looks glamorous happening in a book, but what are those investment opportunities we have as young people? And I think that is a question that really disturbed me because, even as young leaders, yes, you're doing, like for me, I'm invested in the education space. But at the end of the day, as young people, I think it's important we also pursue our personal developments and know where to invest our little resources. So our topic for today on personal financial management, at least what I'm hoping for us to achieve at the end of it all is to be able to, one, to be able to engage and just understand what are the real opportunities in the country. And when designing this, I was thinking of someone, just an average Kenyan youth, probably earning a net salary of 25,000. So with that in mind, you realize that the solutions offered are very, very practical to each and every one of us here. So with no further ado, ladies and gentlemen, please allow me to proceed. So when you talk about financial management, personal financial management, I think for me the question is, what comes to mind? What do you understand when we say personal financial management? And maybe I can hear one or two answers before we continue.
Yeah, so I also think that it's how you're able to, of course, manage whatever income coming in terms of your daily expenditure, and that also has to do with budgeting, cash flow, and all that.
Thank you for the responses that we've been able to receive. So I think you're right. When you talk about personal financial management, it's basically what you're able to do about your financial situation in order to make the most of the assets in your day-to-day life and in the planning for how you wish money to work for you in future. And like you've mentioned, when you talk about financial management, it has 5 key aspects. And these aspects are: 1, income. What is it that you're earning? What is it that comes in? What is the money that you have at your disposal? And then the second part is spending. Now, spending is the everyday expenditure. We're talking about rent, we're talking about school fees, we're talking about shopping, we're talking about money for food, we're talking about even emergency or cars, the money you spend towards that. And then the third aspect of financial management is protection. Here, the conversation on insurance comes up, the assets that you have, the money that you have, how do you make sure it's safe even for the future? But today, I want us to focus on the 2 key parts of financial management, and that's on savings and investments. Now, when I talk about saving, one thing I do know, especially for us as Kenyans, 5 aspects of financial management are income, spending, savings, investment, and protection. So I want us to talk about savings first, and then now the session today is about investments. Now, when I talk about saving, I think again, remember I'm talking about a basic youth. We're not talking about people who have millions and they can save in grand schemes. No, saving for a basic youth, what that entails is, 1, I think all of us, if you are Kenyan, you know about chamas. I think that's the introduction, especially for women. When we talk about savings, the first place we tend to start our savings is the chama. So that is one way in which we save our money as young people. And for those who don't know, a chama is basically a group of individuals who come together and agree to invest some money together and then move it around. So for example, we are 10 people and we are removing 2,000 shillings each. Say it's a monthly chama. By the end of 10 months, as a Chama member, I shall be able to get 20,000 shillings for my use. Now, you see, this is 2,000 probably. If you hadn't saved it, you would have spent it in other ways, but you've been able to save it, and now it's coming back to you through that round table model. And then the other aspect of saving, I think, which is very important for young people to engage in, is something we call circles. Now, when we talk about circles, these are institutions that enable you to save money and borrow upon the money that has been saved, has been kept there. So probably, I know, most of us know this, but I'll endeavor to just explain for any individual in here who might not be aware of how the circle works. So for the circle, how it happens is definitely you acquire your membership, then you buy your shares, and after you buy your shares, you begin to do your savings. Again, I'll remind all of us, the budget you're working with is 25,000. So let's say the savings and investments budget for this individual per month is 5,000. So we've already put in 2,000 shillings in the Chama. So I think we can allocate, let me see, maybe 1,500 shillings in the Chama. Sorry, in the circle. So every month you're able to give 1,500 shillings. And what that does is, depending on the period which you'll be saving your money. So I want us to give it 20 months. That's about 1.5, slightly longer than a half years. So in 20 months, if you've been saving 1,500 shillings, basically what that means is you have 30,000 shillings. Now, if you've been saving continuously, in the circle, being a member, they allow you to borrow up to 3 times your savings. So what that means, now, I want to move us to the next stage. Depending on how you want to use the money, and my hope here is we are using the money for investment. Now I want to slowly introduce us to the topic of investment. So we are assuming you're using the money for investment. That means after the loaning process has been done, with your 30,000, you can actually acquire 90,000 shillings or more, which is 3 times your savings. So now that's another good way to be able to save in a circle. And then now the final way, which I don't know if, I'm not really an advocate of this, but it's saving in your bank account. We know about the fixed deposit bank accounts, but again, in the investments, I'll be sharing about probably where you can let your money sit while gaining more interest than it would get in a bank account. But the truth is, the third mode, which you can save your money, is in a bank account, and it can acquire, I think, from around 5 to 12% interest, dependent on the institution. So I think that's the summary I want to put up on saving. And of course, if you're very, very old-fashioned, like some of us, on bad days, there's always that container where you go and open up a little bit and get some coins out. So yeah, that is actually also a form of saving. I think it's what we call the piggy bank. But I want us to proceed. So you've already established different ways of saving your money. So now the question is, yes, I'm doing a very good job being able to save this money, but how is it that this money can work for me? Now that is what we call investment. So when we talk about saving, it's basically just putting aside money, either for emergency purposes or for a later use. But when we talk about investment, this is actually finding ways to get the money to work for you. This is actually, purchasing of assets with the hope of generating another income from your money that appreciates or gives you extra money on top. So investing is just, putting money somewhere where it will, let me use this term, it will give birth. It will give back to another money, whether actively or inactively. that is what we call investing. And what investing does is, it's, yes, you have your money, but it helps it grow so that you can, one, increase your net value over time, but also two, you're able to meet with your financial goals. So when you talk about investing, now it's very, very, very wide. There are different ways as a young person in Kenya you can be able to invest. Basically, what I'm going to tackle is, how is it that as a young person, you can have your little money, and little here, remember our sample individual earns 25,000, and now we only have, I think, 1,500 to invest. So how is it that this individual can get started on this journey to acquiring wealth? So when you're thinking about investing, there are very many things you need to consider. One, as you'll see later, sometimes it tends to be a risky affair. So what do I mean by a risky affair? You can gain it or you can lose it. It's a 50-50 chance. So when looking to invest, one of the things you need to consider is the risk element of where you want to invest. Something else is the expected returns, the giving birth of your money. How much is it bringing back to you? And that's why probably in my statement, you realize I said, I wouldn't save in probably a bank account, because there is somewhere else I feel that money can earn interest, which is what I'm calling giving birth to more, what we're calling the returns. And then the other thing also for investment, I can want to say buy a 8 million, what um I always see, working in Westlands, there's always those posters of 8 million, you can buy a house. But the question is, do I have that kind of capital? Do I have access to that kind of capital to be able to buy that house? But wanting to invest in real estate, is there something I can do with an income of 25,000 shillings? The answer is definitely yes. And I'll be answering that later in something called the Real Estate Investment Trusts. So we are not giving up on owning homes, but there's actually a way in which, with the income we are earning right now, we can be able to invest in real estate. And then probably the last thing we want to look at when making an investment is, one, the amount of money and how long you want that money tied up. Now, I'll give you a funny joke. For those of us who are doing, who are investing, not really investing, who are saving. So as I was saying, for those of us investing in the NSSF plan, I remember when I was signing up to that plan, they were like, no, you can get this money when you're 65. And I was looking at them, I was like, huh. Anyway, my point, you see, that is money I'm willing to just contribute to and put aside, God willing, for the next 40 years. So I think the point there is, for how long do you want your money to be tied up to that particular investment? And so now, highlighting those few examples, what are the types of investments I feel as young people we can start to actively participate in as soon as when we finish this session. So so we're going to cover 6 key investments. I'll request for the next slide. We're going to cover 6 key investments. That's self-investment, pension funds, bonds, mutual funds, equities, and the real estate investment trusts. I'll repeat that again. We'll cover the self-investment, the pension funds, the bonds, the mutual funds, the equities, and the real estate investment trusts. Now, I know these are words you're always looking at, probably during the news section when they're covering business and they're like, wow, what's going on here, But I've endeavored to just break it down so that you can be able to understand where to start from. And, just in as much as these are the 6 I've selected, I think it's important to know that there are many ways to go about investing. I had talked about the risk factor. So we have safe investments. So these are the treasury bills, the bank deposits, and probably the money markets. We'll be covering that. And then we have what you call the medium risk options. So these are like the corporate bonds, because, you know, like if it's a corporate, say it's a business, I think COVID taught us anything can happen. One day you can be doing well as a business, and the next day there's just no business. So, you know, that's the kind of risk we are looking at here. And then now we have higher risk investments. I think once in a while we hear about the issue of cryptocurrency, and apparently we hear people losing it all. So those are some of the conversations we'll be going. But I think at the end of the day, what I want to say, whether it's a high risk or it's a safe type of investment, my goal is by the end of this, you can be able to probably see how to combine your investments, you know, to just have a good portfolio that works for you and works towards increasing your wealth and increasing your money. So with no further ado, the first one, as you can see on the list, is what we call self-investment. Now, self-investment is as simple as that. Self-investment is you're a young person, you're a graduate, say what you want to become, let me see, a CS in the country, okay? What does that look like? Just understanding the job description of it. What that looks like is probably having a master's degree. What that looks like is probably being knowledgeable in past people's skills. What that looks like is probably being able to manage IT and, you know, even going to the doctorate level of study. So when we talk about self-investment, this is actually investing in your skills, in your education skills, to be able to acquire more knowledge, to be able to live, to be able to be competitive in levels and skills of professionalism that you'd want to reach. So I think the first thing I'd say, that is like the greatest form of investment, you know, just being able to invest in yourself, to invest in your skills, and to invest in your knowledge. And how is this done? I mean, we thank God for technology. I remember I was having a conversation with a young person, and, you know, they were like, I don't have money, or rather, at the moment, we do not have money to be able to go to school. We do not. My parents don't have money. I mean, we are so many of us, and I was already graduated. And I was like, no, that is not an excuse. In an era of the internet, and you have a laptop, education and certification looks as simple as getting and enrolling for an online course and getting certified on the same. So I think the first thing I'd be able to say, and please pull up the next slide for me, is I think the first form of investment that you can make, and I feel it's the easiest, is the self-investment, just investing in yourself and in your abilities. And then the second type of investment, now, again, I can see a few people have just joined in. We are looking at the types of investment that a young person, probably getting a net salary of 25,000 shillings, can be able to engage with. And yeah, I'll be pulling examples from that. So now the next one that I want us to cover is the pension funds. So what does this mean? You had me talk about being a profilic contributor to the NSSF. So basically, it's a fund where you contribute money long term to be able to save literally for old age. So that's what it's about. Please, let's move to the next slide. And so, you know, talking about old age, I feel like this is one of the simplest and the safest ways to save. In fact, I remember if you're unemployed, the lowest, I don't know about now, but the lowest, when, at least for me, when I was getting into NSSF, you had to pay every month is 200 shillings. I mean, seriously. That is very affordable, you know, even for you to be able to start on that. But as you get more advanced, there are different forms of pensions. So I just got the top three for us to be able to go back review, and probably you get to decide which one you want to join. So we have one from by ABSA, we have one by Britam, and one I'm in also, the CIC Asset Management Limited. So I think this is literally, so I only know about the long-term one. I haven't tried apparently there's also one where like after a period of time you can be able to get back your money. But just to give you a good example is say you're saving let me see about, let's talk about even 1,000 is good money. If you're saving 1,000 a month towards your pension fund, that's roughly around 12,000 per year. Now this is the good part. When you're retiring, the retirement age is around 65. So by the time you're hitting, God willing, again, 65, what that means, you'll have accumulated 2 million shillings. I mean, easy money with just the 1,000 or the 200 shillings that you've been putting aside every month. So I think that is one form of investment I'd encourage each and every one of us, at least, as a start, enroll into the pension fund. And like I mentioned, you have no excuse whatsoever, because as simple as 200 shillings, you can be able to be a member of that fund. So I think the assignment I'd give all of us, if you're interested probably in doing the pension fund for a period of time and then getting your money, we'd need to go and research further on which funds offer that package and what it looks like. Now, moving on swiftly, I want us to move to what we call the bonds. Now, I remember when I hear bonds, I'm like, huh? You hear bonds, especially in the news, with big companies and millions, and you're just like, oh my God, I don't have that kind of money. Now, probably allow me to start by defining what are bonds. So basically, a bond is a way that either a government or a private entity borrows money from the public to be able to do the projects. Now, you realize some projects are very expensive. If, say, a project is 5 billion shillings, I mean, no one wakes up in the morning and they have 5 billion shillings. But we as Kenyans have 3,000 shillings, 10,000 shillings, 1 million, and we can contribute that to the government, whom they can use it to probably conduct a project and then return that money to us after the project is done. And it's willing investment and it's willing returns. So in a few words, and I'd request us, okay, yeah, we are on the right slide. So in a few words, when you're talking about a bond, it's basically the government or a corporate institution asking for your money, keeping it for a period of time while giving you what's they called interest periodically. So it can be either over it is over 6 months and at the end of the year. And then once they are done, with whatever they were using the money for, they return the principal amount back to you. So principal amount basically refers to the amount of money that you invested. And so now, again, I think as young people, we should not be scared about the bonds. Why? Our government has invented, just trying to bring young people on board. There's something we call M Akiba, like M-Pesa, M Akiba, you get the drift. But there's something called M Akiba, and actually you can transact on government bonds on your phone. Now, this is the best part, and that's why I'd encourage us to stop shying away from these things and actually start now. Because the lowest amount you can be able to invest is 3,000 shillings, and you get a 10% what's it called, interest, an annual interest. Now, walk with me here. What that looks like is you have 3,000. So at the end of the year, you have 300,000. 300 shillings. Walk with me still. What that looks like. Remember, I want us to go back to our savings. We were saving in a chama, okay? In our chama, we were putting 2,000. So you've done your round, umefikiwa, you've gotten 20,000 shillings. Now, this 20,000, I know you need a new phone, but hold it for a minute. How about you take this 20,000 and invest it in government bonds or corporate? Okay, let's do government for now, because at least that's what I know is safe. It's very safe. So what if you invest your 20,000 in government bonds and just leave it there and keep doing you. What that means is at the end of the year, you have an extra 2,000, just like that. Now imagine the possibilities if God has blessed you with more money. Remember, I'm working with here with me with an income of 25,000. But imagine if you just have a little bit more resources that you can put aside. I mean, isn't it wonderful how much you can just acquire? Your money can grow while it's safely tucked away. So I think in summary, that is what bonds is about. Now, just allow me to say, when you talk about government bonds, they are safe. Government bonds are very safe because they are guaranteed. Government bonds are guaranteed, and even for companies, you realize they tend to invest a lot in the government bonds. So later we'll look at the private sector bonds and maybe some of the risks. But I want us to move away from the bonds, and I hope we've all been able to just understand in a simple way how the bonds work. And I wanted to verify the information on Emma Kiba. So at the moment, the website for Emma Kiba is not working, but the instructions on how to join the same are working. So probably the assignment I want to give to all of us, if you're interested in the bonds, and probably is if there's a financial practitioner logged in today, feel free to just share with us more on that. But those are the opportunities available for young people. So living on bonds, I think the parting shot is with 3,000 shillings, you can be an investor with the Kenyan government. Now, next, I want us to move to the mutual funds, or what we call the unit trusts, and I'll move on a bit faster because of the time. So when we talk about the unit trusts or the mutual funds, basically, what this is how do I put this? It's basically uh, a company, again, wanting to probably create a new product. I think all of us in one way or another have heard about Saiton. So this is a company that is investing. I know Saiton, especially for real estate. So this is a company that is investing in real estate. Now, a real estate project could probably, let's give our project worth probably 300 million. Now, I cannot, you just don't wake up and have 300 million shillings. So what you do is you create a pool and get people to invest the little they have into to join up and have the 300 million. So I, as myself, probably will give in 50,000. Someone else will give 20,000. Someone else will give 100. Someone else will invest 5 million. So that is basically what I'm trying to say is it's a collective scheme that pulls money together for many investors, and then it's managed by a professional. So the professional in this case now is the Saiton company. So they'll take this money and then they'll invest. And then what they'll do is they'll be able to give us returns in the form of interest. Now, there are two types of mutual funds. So we have an open-ended mutual fund. So this is, you have I'd call them shares or your units, which you can sell at any time that you want. And then there's the closed-ended mutual fund, whereby you commit your money for a certain period of time. And in case you withdraw before that time ends, you actually incur a penalty. So that basically means getting less than what you invested in. So I think I found out that the mutual funds are it's one of what we'd call the risky, the mid-risk investments. So I have just been able to outline to you the four, again, key mutual funds I feel are performing well. Please go look through, understand what they're offering if you're interested in investing in the mutual funds. And I think, again, I'll mention it's kind of risky because, I give my 1 million towards the 300 million, and then say COVID happens and there's a hike in price in the materials. So that means a hike in budget. And then all of a sudden, people have other interests other than buying houses. So the flow of of clientele I was hoping will be able to invest in the project reduced is. So that's just an example to show you the kind of risks we are looking at when we're talking about the mutual funds. But one thing I would advise is always making sure that you have a professional, or either you do your research very well or actually have a professional to be able, an investment, advisor or an investment banker to be able to share with you about the trends and probably where you should invest your money. And then moving on very fast, I think the next one is shares. Now, shares is basically just you owning part of the company. And one of the things, I think one of the greatest regrets I ever had is my friend told me, you know what, can you invest in Safaricom shares? Back then, I was like, nah, I am young. So I didn't invest. But they went ahead and invested the amount of money they did. And I just remember when they were getting their interest, it was so much money. I was like, my God, this is free money. Okay, not really free money because you invested your money and you took a chance with it. But I was like, this is free money. I wish I had invested in Safaricom shares then. But not to worry, I learned the lesson. So I think when you talk about shares, it's just ownership holdings in a company that are listed in the securities trading exchange. And yeah, so what shares basically means is you owning the company, and in case there is an interest, you're able to acquire the interest, and in case there's a loss, also you're able to badge the same. But it's always advisable when thinking about the company in which to buy shares, just do your research. I mean, it's obvious if a company is doing well. Okay, it's not obvious, but if a company is doing well, I think there's that track record. Just going back to look at their history, you can be able to gauge on the same so that you can know where to invest your money. So again, like I shared, there's definitely so much more on the intricacies of understanding the shares, and what we call the equity and the stocks. But this is just to give us that basic understanding and to bulge us to want to explore more into how we can invest our money. Now, the last one that I'll cover extensively is when we talk about the real estate. Now, as we all know, real estate, being Kenyans, again, in fact, being Africans, if you don't own land or a home, anyway, I think this is some of the things that we need to look at as a society. But, with the current situation, I think we've been programmed to, all of us at one point want to own land, probably own a home. And that is what real estate is. But looking at my study person who earns 25,000, really, I do not see any way that this person, at the moment is becoming a landowner. But what is the solution? I want us to go back to our savings. So we had saved, was it 30,000? We were getting a loan for 90,000. So let's double that. Let's save that money for 3 years. So that will be 90 times 3. That's 270,000. Now, the different things this person can do. So with 270,000, one, I can get a quarter acre in a very remote place. We all know those plots, right? So I can get a quarter acre in a very remote place. Two, I can go to the rural areas. In fact, like at the moment, someone shared with me, like, there's land being sold for 200,000 somewhere far from Eldoret. I was like, wow, okay. Being a landowner in Kenya, it's prestigious to own land everywhere. I was actually thinking about it, but I don't think it's something I'd pursue. Knowing there are other probably more returning forms of investment, but you get the idea. So with the 270,000, what I wanted to say is one way that you can actually invest in real estate is something we are calling the Real Estate Investment Trust. Now, it sounds very complicated, but what this is you actually invest in a building, let me just, a building that is being built without necessarily having ownership of that, but rather once it's completed, because you offered the initial capital, you are able to get back interest and returns on your investment. So let me just break it down further. What that looks like is, so there are two ways. Sorry, let me clarify first. So the first way is, get your money, get a plot of land, start building. Fine, that's real estate. The second way is, especially in urban areas, what we are seeing nowadays is when apartments are coming up, you just purchase your unit and you're able to buy that slowly. That's also brilliant. But I'm also want to introduce to us about the real estate investment trusts. Or probably you'll see it around now that you've heard about it. It's called the REITs. The REITs. So what this is where managers source for funds, again, from different people, and then invest in real estate, which they can sell or rent to generate income, and then they distribute the returns to whoever contributed to the same. And one thing you need to know is it's quite new. It's quite new in the country. And what happens is, as we speak at the moment, I've literally been able to just list all the rates on NSC. So we have the ILAM, we have the IRET. I think you can all be able to read that. But what I'm saying with all those RRs is we've all heard about the Kwetu hostels. I think it's something that has caught on really well, especially in the urban areas, whereby it's hostels near university students that provide amenities, and they're able to live in a good society. And if you're a parent, your child is safe. And, it's just a very convenient environment for students to be able to study in, that offers them even the facilities they need to be, like a school hostel, but outside the school. So that is what you're calling the real estate investment trust. And what basically I'm encouraging us to do, again, please research. Don't say Sofina mentioned this is very good, so I'm going for it. Make sure you research extensively. Again, I'll keep repeating this. Make sure you get a professional to be able to advise you further on what's the best investment. But I think when we talk about real estate, we all have a chance. You now don't have to have the 4 million to be able to invest in real estate. Although I definitely encourage us to also keep the traditional way, of probably saving up. I will discourage us against mortgages, but just being able to save up. And I think at the end of the day, even for your peace of mind, knowing you have a place that belongs to you, and in case of anything, you have a safe haven to go to. So I will definitely encourage all of us to purpose to be able to, have engaged in that space where you have a home or you have something to call yours. Now, I'm going to do this in passing. Next, I want us to tackle cryptocurrencies. Now, you heard me say I would encourage the traditional method of investments. But the truth is, as being young people and the way that the world is moving, we cannot at all ignore some of the new investment modes that are coming up. So one of the things that are coming up very, very fast is cryptocurrency. And, we all hear once in a while, I actually hear all the time, cryptocurrency is risky. Your money tends to disappear very fast. But I think the question and even the challenge, not only to you, but to myself, is to understand what exactly is this cryptocurrency. When you're talking about risks, at what point does all your money disappear? At what point do you gain returns? Who exactly should actually be the person to advise you on what to do? So again, I don't want to touch on that. I definitely have scanty information, but just for you to understand, when you talk about cryptocurrency, we've all heard about Bitcoin, probably being the next form of exchange and trade. We've probably heard about the Litecoin. We've probably heard about the Ether. But I want to encourage us. There are different platforms that speak on the same. Probably because in Kenya, I don't think, and you can, if there's anyone here who's investing in the cryptocurrencies, after this, please feel free to share your experience and your knowledge. But you can also get knowledge on Udemy, Kajabi, and Teachable. So to all of us, let's go find out more on what cryptocurrency is about. And who knows, probably, go and invest in there too, and see what that does for our money. Yeah. Again, they say it's risky, but I'd love to hear what you've heard of the same. And if you're investing in the same, please share. So finally, as we complete, the last one is peer-to-peer lending. And, just those, I'd call them juakali forms of investment. I mean, no one discourages you. I know we have people in here, your friends come to you and they're like, give me 10,000 shillings. And you're like, I'll give you 10,000 shillings, but ukirudisha na tao moja juu. That's, I mean, your money has worked for you, and that's wealth creation. And that's what we're talking about, really, just being able to make your money work for you. But also, we all know the risks that go into that. But also, another form of, investment is someone starting out their company and you're just being able to support in terms of, probably buying the stock and them selling it for you. And I think that's a way of your money investing. And then I'm sorry, but this should have been the past. The other way of investing is business. I mean, you've put your money in and you're hoping to yield returns in terms of profit. That is also a mode of investing. So I'm hoping, from this session that you have learned one or two things. And I'm hoping I've been able to just open our eyes to question more and to take the risks, to want to relentlessly pursue wealth in a manner that the little money we are getting actually goes out to, like I say, give birth and bring forth, more money. But as we finish up, I have some bonus points. So for the bonus points, just in case anyone is logged in and they're literally struggling at the savings, the whole presentation was on the assumption you've developed the discipline to be able to save. I think the example I used in a chama, and you've been able to save in a circle. So if you're just, wondering, oh my God, this conversation, where do I start? I have some bonus tips for you. If you're finding it difficult to be able to save your money, I think we have some support tools that you can be able to use. So one is make a budget and stick to it. In the 25,000, I think I clearly mentioned we are saving 5,000 shillings. And I think you've seen, I hope I've been able to demonstrate how from that 5,000 shillings, we've actually yielded so much more in terms of investment. And then in case, even making a budget, following it through is a challenge because, we tend to be different personalities. In the era of the internet, we have applications that actually literally they help you monitor your expenditure. So engaging on some of those apps. And if there's someone who uses the apps, feel free to recommend to us which one and even give us your experience of how it's been helpful. And then the other thing is, as young people, there's this common term I don't like a lot, but hustlers, it's a weekend right now. You go out, you do something, you earn 1,000, you earn 2,000. You had not planned for this money. How about we develop a culture of when you earn this 2,000, kuna ile tunasema kujiambia pole, so remove 500 shillings, spend it nicely. But for the 1,500 shillings, how about, since you hadn't planned for it anyway, how about you put it aside and, put it towards your savings account? And then the other thing is, when you're thinking about savings and investment, make sure you know the risks. I think one consistent thing, even as I finish, is do your research well. And if possible, get a professional who can take you through to actually understand the nitty-gritties of how to make your investment. Never invest more than you're willing to lose. Again, I've mentioned it's a 50-50 affair. So, go in knowing I can earn tremendously or I can lose it all. or I can lose a little. So, be wise in how you make your decision. And then the other thing is, set realistic and achievable targets. I can live here saying I want to go buy a building worth 20 million, but the truth is, do I have such kinds of resources right now? No. But if I was to do my calculation in the next 10 years, if I invest wisely, is it something I can be able to achieve? Yes. So I think the secret lies in, now that we know about investments, probably the next best thing to do is to start now. And with that, ladies and gentlemen, thank you so much.
Thank you so much, Sofina, for that insightful about personal finance. Personal I've learned a lot regarding investments. And maybe what I can echo is most youth fear investments or savings because we think we don't have enough to start. But what I can say is start small, start with what you have. The little you get, just put aside a little bit of that, because there's no good time or there's no best time for starting investment or for starting savings. So whatever you get, regardless of how little it is, even if you're a student, maybe you just have pocket money, that pocket money, just have a little bit of it, put it in an investment. As our speakers told us, we have different options we can explore, which you are able to start small. They enable us in the long run to be able to grow, as we all say that akiba yozi and haba na hapo jaza kidogo. So start small and start today, because if you wait to start tomorrow, it will never start. So start today.
Thank you so much, Sofina, for that wonderful session. Indeed, there was a lot packed in there. The thing with this topic is like, you never know what's new out there. So it's usually good to have these conversations. The thing that also stuck with me the most is know the risks, because I think everyone wants good returns, but I think that's where we usually go wrong. So for example, in the mutual funds and trust, company like Saiton, I would right away say I wouldn't try that, because it's too much risk, although they promise a lot of returns. So for me, like anything that is above 10% set by like government bonds and bills, that's a no, because it's too much risky. So you're either getting too much money or you lose everything. So that's really good to know from you. But my top tip is also just that, look at the risk. And if you're willing to take the risk, then that's good. But for me, Saiton, kidogo hapo naogopa. Also, the other thing that I feel like you should have addressed is the Ponzi scheme. These informal companies that do promise like, 3 times returns. Like, how do we deal with that? Because I think a lot of young people have fell for that, and so you end up losing everything. So what advice would you have?
The advice I have for that, and I mean, at the end of the day, let me tell you, hakuna uchungu kama kupoteza pesa you worked for, So knowing you have your 20,000, you have your 50,000, you have your 100,000. Now, which one is better? You just blindly go in and invest, or knowing in our society today, probably getting an expert, a financial expert to advise on the same will just probably cost you 5,000 shillings, or if the investment is more, about 10,000 shillings, and lowers the risk of your investment. Which one would you go for? So definitely I would say, standing from a place I'm hoping we are all standing at, we are not in the financial sector. So I would say get a professional to be able to look into the investment that you want to do. I mean, it's the same thing, even with when you get an injury. Say I don't know how many of us have been able to just get, what's it called? When your leg, what's it called? A sprain, or something. And then you decide to self-medicate. Yet what happened is actually a bone went out of place. So 1 year, 2 years down the line, you still have an issue with your leg. Yet, had you just gone to the doctor, a scan had been done, the right thing would have been done and you'd have been okay. So yeah, I think and probably it's a practice I want to encourage us to have, to one, research deeply into investments you want to make, but two, also acquire professional advice and professional input into the investments you want to make, particularly for the big ones. I think for the small ones, it's fine to be a risk taker. So I wouldn't discourage that. Take the risk, learn from it, and you'll even get better because you've tried it and you've seen how it goes. So at least for the small ones, go ahead, try it out. It can work, it cannot work, that's okay. But for the big ones, please make sure you're well informed on the move you're making. Thank you.
Sofina, you could maybe as Sam has mentioned, how to strike a balance between long-term investment and short-term investment.
Yeah, all right. Thank you so much. So my advice, I think I'd give is I don't think it's striking a balance. I think it's an issue of planning. I think it's a matter of sitting down with yourself and saying, what are my goals? What is my plan? Where am I headed to? What do I wish to achieve? I think when you're able to sit down and say, in the next, again, talking long term, in the next 20 years, I want to probably have a high-rise building, somewhere. I'll be very practical. Nairobi is already full, so I want to have a high-rise building on my half plot, maybe somewhere in Kamulu. Okay, just an example. And then the question is, how do you get there? Yes, in terms of short term, yes, there are needs, but at the end of the day, when you're doing your planning, in the next, 10 years, 20 years, I need to achieve this. So what that does for you is, and then now, there's the whole question of sacrifice, there's the whole question of discipline, being able to set aside your money. There's the whole question of, I remember I have one of my mentors who actually tells me he stayed with his wife in a 1-bedroom for 4 years, and he was earning some good money. And all his friends were like, seriously, why aren't you using your money? Why are you and your new wife staying in that place? But he knew what he wanted, because now, as we speak, he actually has a very big 6-bedroom house in one of the lavish estates in Nairobi. But then he had just, what we are doing right now as young people, he just bought a piece of land somewhere unknown, and he was investing on it because he'd seen the potential. So I'm not sure if I've answered your question, but I think knowing how to balance the long-term and the short-term investments, for me, I feel, will be guided with the goals that you have when it comes to your investment, the investment you want to make, and the financial, the investment you hope to achieve. I hope I've answered your question.
Yes. That's clear. But maybe to put some twist on it as well. Assume it's a case study of someone who is trying to manage his, to run his current activities. Maybe like you need to educate your, your children, so to say, and at the same time you want to save for the future. I don't know whether you get my point. Like having something like a mortgage that you need to be paying on a monthly basis. So I just want to understand. Yeah.
So in such a case, wow. Again, I think for me, I'd advise, I think solution ni kujituma. We usually say, there's this very common saying, which I find to be very practical. You can't depend on one source of income and expect to be rich. So I feel it's going back to the drawing board, because, at least to the income you're having right now, you're certain this money is going towards my children. There's that division you've been able to do. So the question then is, where do you get additional, and I know it's hard, I know it's hard advice, especially in these economic times, but I think it's a hard question you need to ask. Where do I get additional income? So is it that you'll invest in agriculture? Is it that probably you'll offer service? Are you good at business? You know, yeah, I think that's a personal conversation. But the bottom line of the advice I'm giving is probably identify other sources of income. And then I know you mentioned you coming in late, but for those who are interested, just share your email address. And on the social media pages, I think if it's okay, it's a conversation you can continue to have, and maybe even loop in the actual experts on finance to advise accordingly. But I think for me, being where you're at the moment is, I would advise probably looking for other forms of other sources of income and being very deliberate in your investments in the future, and probably even cutting down, if it's possible, on part of your expenditure and just working around your financials to be able to achieve your goal.